Have you ever wondered what it takes to be truly profitable as a tax sale investor? After more than 22 years in this business, watching billions of dollars of real estate sold at tax sales and investing in thousands of properties myself, there are some key patterns amongst my most successful tax sale deals. Today, I want to break down the lessons that I've learned through my most profitable tax sale investments so you can replicate those same strategies. First off, this is the Tax Sale Podcast. My name is Casey Dimon. I'm a tax sale veteran. I've been investing in tax-filtered real estate since I was 18 years old, and I've taught thousands and thousands of people all around the world through my videos, my books, and the Tax Sale Academy. Now, before we jump in, let me say this. There is no single type of property. There's no single location, no single strategy that will guarantee success as a tax sale investor. Instead, it's about understanding the opportunities when they are put in front of you. It's about being prepared. It's about applying smart strategies. So as I look back at my best deals, there are clear similarities amongst them. And today, I want to share with you what they all had in common. Now, people always want to know, is there more money in lots and houses and commercial properties and specialty properties? The truth is, I've bought plenty of vacant lots over the years, and I've made a lot of money in vacant lots. I bought plenty of houses and commercial properties and specialty properties over the years, and I've made a lot of money in all of them. And my best deals truthfully come from a mix of property types. I would love to sit here and say, you need to go after vacant lots or houses or whatever it is, and that is where the sweet spot is. But the truth is, it's a mix. I've made big profits on lots, on acreage, on houses, even specialty properties like subdivisions and like marina type properties. Here's the takeaway, is I don't want you to limit yourself to just one property type. Vacant lots might seem simple, but there are opportunities across all kinds of properties. The variety here will open the door to larger profits once you fully understand what you are doing. So what you can do is you can focus on all property types, even if you start off investing, actually deploying your capital in just these simple, easy, small vacant lots. That's okay, but still explore other property types, even if they're out of your comfort zone right now. Study, learn, and develop the confidence to go after different property types, and eventually you'll be able to pull the trigger. While it's great to start off with one property type to learn the business, there are truthfully opportunities in all of them. So if you are a land investor, make sure you also consider homes and you start learning about those on the side as you focus all of your attention, maybe as you start on vacant land. If you only want houses, don't ignore the vacant lots. There's opportunities throughout. All right, next one. One of the biggest lessons I've learned is that smaller markets often provide better opportunities, at least for me. Many new investors want to stick to the large markets because it's what they know, what they're familiar with. But those markets are oftentimes very competitive. And here's the issue. The larger the market, the more competition you're going to have. And that means you pay more money, you make less money. More work for less money. That is not my idea of fun. The majority of my most profitable deals came from those small to mid-size markets. These are areas that are going to have fewer investors that are bidding, meaning that you can secure properties for better prices. You can make more money. The demand, of course, is something you need to research ahead of time. You don't want to go so far out in the middle of nowhere that there's no competition, but there's also no buyers. Generally speaking, however, in an area where there is at least a little bit of demand, if you buy it correctly, you will be able to find a buyer. The next one. Unexpected wins. Always be ready. Some of my best deals came from properties that I did not expect to win. So for example, I've talked about this before, but I stayed to the very end of an auction one time because the second to last property was a property that I wanted. It was a property I knew I could buy. I was very, very confident that I was going to be able to buy it and make quite a bit of money. Unfortunately, I was outbid on that property. However, the property immediately after, the property that was sold at the very end of the auction was a 14-acre property that I had done some research on. Now, I thought that that property was going to be well beyond my budget once the bidding started. However, nobody else bid on that property. I won it at the opening bid and I made a lot of money because of it. Now, I was sure my chances of getting that property prior to that auction were virtually zero because I knew that it was a very, very valuable property. But regardless, I still did my research on that property. So always be ready. Always research properties. Always be prepared to bid. So research every property that you want to invest in if the opening bid is within your budget. A lot of times, yes, they'll go far beyond what you think they should go for, and you won't be bidding on those. But be prepared to bid on that property just in case. Again, if that opening bid is in your budget, be prepared to pivot and bid on unexpected opportunities. Don't put all of your energy into that one deal. That second to last property, the property that I thought I had a very high likelihood of buying, it went far beyond my maximum bid amount. But because I didn't put all my focus on that one property and I researched all the properties that I could afford based on their bid amounts, I did research that final property. And when the opportunity was there, I was flexible enough to say, hey, I'm going to bid on that property. And because of that, I made quite a bit of money. The next one, strategic plans for certain properties. And this might be a little bit advanced if you're just getting into the business, but about half of my most profitable deals involved very specific strategies tailored to that property. So for example, I subdivided larger parcels into small lots. One parcel had 30 lots inside the legal description. They were already platted, but it was just one parcel, had all these different lots. I bought it, and then I sold all those lots off individually as separate parcels. I've also bought multiple lots in one subdivision. We're talking 15, 20 lots in one subdivision that nobody else seemed to want. And I created an entire marketing campaign for that one specific subdivision. Took pictures of everything nearby it, even built a website for it, to the point where some people actually thought I ran the sales office in that subdivision. Nope, I was just reselling these tax sale properties. I created demand for those properties. What you can do is think creatively about how to maximize the value of a piece of real estate. Think outside the box. Watch and learn from others and then add your own little twist. That multi-lot parcel that I just talked about that I bought and split up, that was a strategy that I learned entirely from another investor. I saw them do it and thought, wow, that's genius. Buy in bulk, sell individually. I did it and I reap the reward from it. Simple but smart. Learn from others. All right, next one. They were always purchased at or below the price that I told myself I was going to pay before the auction. So I had a max bid amount, and every single one of my most profitable deals was either at that max bid or below it. I know it sounds very, very simple, but when you're in the action, it's very easy to place one or two bids over your maximum bid amount just because you are frustrated, just because you are impatient. But every deal that I'd done where I made a substantial amount of money, I bought at or below the price that I had written down in front of me on that bid sheet. Sure, there are plenty of deals where I probably could have paid a little bit more money here and there and still made money. But the truth is, you must have the discipline to stick to your plan. Because when you do, you will profit. So always stick to your budget. Do not get caught up in bidding wars. Do not be impatient. Do not get frustrated. That is all nonsense. This is a numbers business. This is not an ego business. Stick to the numbers and you will do just fine. The next one, minimal work after purchasing. This is another key similarity of my most profitable tax sale deals, and that is that very, very few of them required extensive work after purchase. Outside of clearing the title at times, I rarely did much else. I didn't deal with contractors, no permitting processes, other time-consuming or expensive tasks. Basically, I focused on the fact that speed will allow me to get into an investment, sell it very quickly, and move on to the next investment. And when I've done that, I've basically limited the exposure that I had, and I've allowed myself to do very, very well in a lot of these deals. The last thing you want is to get stuck in a 6-month or a year-long permitting process and remodel. Not only does this allow you to snowball your money over and over and over again by getting in and out of deals, but it also ensures you don't get stuck with those holding costs, which will kill your margins. If you want to see profitable deals, you need to do everything you can to keep your margin strong. So to most of you out there, you should probably avoid properties that require major renovations. Things that take time and a lot of money, unless you're very experienced and you're well capitalized. Focus instead on quick flips where you can keep your money working and minimize risk. A lot of people think that just because you flip a property quickly means your margin is going to be very low. And this is very, very far from the truth. Actually, I've done very, very well just about my entire career flipping properties very, very fast. Last one, but definitely not least, understand it is a numbers game. The most profitable deals that I've gotten have come from putting myself in front of thousands and thousands of properties being sold. You will dramatically increase the opportunity that you have simply by researching properties and attending more tax sales. One auction might provide you, say, 20 properties to choose from. That's 20 chances at a great deal. Now, if you go to one auction per week, you suddenly have 1,000 plus opportunities over the course of a year. If you go to one auction every single weekday, you suddenly have 5,000 plus opportunities over the course of a year. Understand, it is a numbers game. Learn what you're doing. Become efficient at it. Do the research. Then go out there and attend auctions. The best opportunities, the most profitable opportunities will not just fall into your lap. You must go out there and find them. Looking back, the most profitable deals that I have had in my career were because I was prepared to buy the properties. I did my research. I did my due diligence. I stayed flexible. I kept the process as simple as possible. I didn't get into all this extravagant stuff. I got in, I got out. They were purchased below market value in small to mid-sized markets where I'm not dealing with loads of competition, and they required very, very little work or financial contribution after I made the purchase. By sticking to those principles, I was able to consistently find success in more than 2 decades in this business now. And for over a decade now, I've been able to watch many, many Tax Sale Academy members apply these same principles to their own businesses to find success for themselves. Listen, if you want to succeed in this business, the key is preparation and education. Study the market, learn the strategies, and always be prepared. Always be able to adapt. Every great deal starts with solid research and a willingness to take action. Listen, I hope you enjoyed this episode today. I hope you found this episode beneficial. I hope you find all the episodes that I put here on the Tax Sale podcast and over on my YouTube beneficial. If so, do me a huge favor, please. Leave us some positive feedback, whether it's that thumbs up button, whether it's a 5-star review, or a positive feedback comment. It really means a lot to us. It encourages us to continue making these videos, making these episodes, and also helps us out in the algorithm world when it comes to searches and all that good stuff. And as always, for more information on tax sale investing, if you want access to our most comprehensive tax sale training that we offer, check us out at taxsaleacademy.com. Hey, take care and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.